So welcome to all of you Shiksha 360. And today basically we have to start the chapter number 14. Clear? Basically we have to start the chapter number 14. So before moving towards the chapter number 14, as first of all, basically in the previous session, basically we have discussed the chapter number 13. So I will discuss 4 to 5 questions. Clear? Basically 4 to 5 questions of the previous topic. Clear? Of the previous topic. And I request to all of you please participate. Clear? And I request to all of you please participate. So please tell what is the answer of these questions. Clear? I will discuss one by one all these questions basically with all of you. Clear? So basically in every session, clear? Now basically we will take clear side by side. Basically we will start the PPP session also. So basically we will take 1 or 2 questions, basically 4 to 5 questions of the previous session, and we will discuss the next session also. Clear? Side by side. So here, first question of our today discussion, only 5 questions basically we have to discuss today. So Mr. X, the proprietor of the firm, clear? Basically Mr. X, the proprietor of the firm, invest rupees 50,000. Clear? Basically how much the proprietor basically invest rupees 50,000. His personal cash, clear? This is his personal amount, clear? Personal amount, clear, in the business. Clear? So basically when this is basically invest basically in the business, so basically what they will do? So basically either way they will do the purchase the machinery, or other things basically they can do basically with this amount. Clear? Or other things basically they can do basically with this amount. Clear? So what will happen? That the asset will increase, liabilities will decrease, owner's equity or capital is decreased, or option number D is all the above. Clear? Or option number D is all the above. Clear? So please tell fast what is the correct answer of this question. So please tell fast basically what is the correct answer of this question. Clear? So what will happen in that case? Clear? So basically what will happen in that case? Please tell fast what is the correct answer. So the correct answer is that is basically when the person basically invest in the business. Clear? So basically liability, basically this investment, this is the liability. Clear? So this is the liability for the organization. Clear? Basically, but for with this, clear? Basically, but with this amount, they are purchasing the assets. Clear? Basically, they are purchasing the assets. Clear? We cannot say that the liability will decrease. Clear? Liability will not decrease. Clear? This much amount basically they have to return to the proprietor. Clear? Basically, they have to return to the proprietor. Basically, it lets the asset will increase. Clear? Basically, it lets the asset will increase. Option number A is the answer. Clear? As if the person basically invests rupees 50,000 in the business, so they want that basically they will get their 50,000. Clear? Basically they will get back their 50,000 along with some profit. Clear? Along with the some profit. Clear? That's why basically anyone basically will start the business basically to earn the profit also. Clear? To earn the profit also. Clear? So option number A is the correct answer, that the asset will increase. Clear? Because with this 50,000, clear, they will purchase the machinery or other equipments. Clear? Or any other thing. Clear? So that basically they can run the business well. Clear? So that they can run the business well. So it is clear to all of you this point. Please tell fast. So option number A is the correct answer. Clear? Option number A is the correct answer. Clear? Please go through these points very carefully. Clear? Not typical, but you have to understand. Clear? So liabilities will decrease. So there is nothing anything. Clear? Liability basically will decrease when basically when the company basically will return their money. Clear? Return their money. Clear? To the owners. Clear? Or basically from where they are getting the loan. Clear? Now next question. Question number 2. Mr. B, a partner of the firm. Clear? Basically Mr. B, a partner of the firm, basically withdraws cash of rupees 20,000. Clear? Basically for his personal use. Clear? So basically when any cash is drawing, basically withdraw. So basically what it is called, we have already discussed in the chapter number 13. Clear? Basically when any partner basically withdraw cash basically from the firm, what it is known as, this is already 0.5 mark question they have already asked in the examination. Clear? Basically that it is called as drawings. Clear? That it is called as drawings. Clear? So basically Mr. B, a partner of the firm, basically withdraw cash of rupees 20,000 basically for his personal use. Clear? Basically for his personal use. Clear? So that is basically known as a drawing. Clear? So in his context, basically, which of the following statement basically will be correct? Clear? So in this case, basically, which of the following statement basically will be correct? So assets will increase. So there is nothing any effect on the assets. Clear? There is nothing any effect on the assets, and we cannot say that basically on the liability also. Clear? Because we don't know. Clear? Basically whether they have put any cash in the firm or not. Clear? So that is basically we can say that basically capital or owner's equity will decrease. Clear? We can say that basically the most correct answer, that is the capitals or owner's equity will decrease. Clear? That is the capital or owner equity will decrease. Clear? That is the capital or owner equity will decrease. So option number C is the correct answer here. That is the capital or owner equity will decrease. Clear? So option number C is the correct answer. Please tell fast if you have any doubt, any query regarding that. Clear? I will explain once again or basically with any other example. Clear? But you have to understand that basically how basically we will move towards that. Clear? Basically how I'm moving towards the question. So basically here, basically you have to think logically. Clear? No need to cram anything. Clear? Basically no need to cram anything. Just you have to think logically. Clear? Go through the session. I have discussed in detail all the points. Now you have to go through logically. Clear? Now move to the next one. A company raises a loan. Clear? Basically a company raises a loan of rupees 24 lakh basically from the bank. Clear? A company basically raises a loan of rupees 24 lakh from the bank. Clear? Basically that is basically they are getting the loan. Clear? So basically if we are taking the loan, so basically we are becoming debtors. Clear? That is basically we have to return the money. Clear? That is basically liability is increasing on us. Clear? That is liability is increasing on us because this is the amount of any other person. Clear? Basically which we have to return. Clear? Basically which we have to return along with the interest. Clear? So what impact basically will it make? Clear? So basically what impact basically it will make? Assets will decrease, liability basically will decrease, capital will increase, or any of the above. Clear? Any of the above. Clear? So basically when any company basically taking a loan. Clear? So basically it leads to the liability basically will increase. Clear? That is basically directly. Clear? Loan, that is liability. Clear? So please remember that loan, that is a liability. Clear? Loan is similar to the liability. Clear? Loan, that is a liability. Clear? So basically it leads to the liability basically will increase. Clear? So it directly leads to the liability basically will increase in that case. Clear? Liability basically will increase in that case. Clear? So option number B is the correct answer here. Clear? Option number B is the correct answer here. Now move to the next question. Question number 4. Firm B. Clear? Basically firm B had raised a loan of, clear? Basically firm B had raised a loan of rupees 15 lakh. Clear? Basically firm B had raised a loan of basically 15 lakh from the bank basically in the previous year. During the current year, clear? Basically during the year, basically it makes a repayment of installments of rupees 3 lakh. Clear? Basically last year basically it will be 15 lakh. Now this year basically they have paid rupees 3 lakh. So now it will become rupees 12 lakh. Clear? Now it will become rupees 12 lakh. Clear? So due to this, which of the following basically will not be correct? Clear? So please tell fast basically what is the answer. Clear? Basically what is the answer? Clear? Due to this basically which of the following will be correct? Clear? Basically will not be correct. Clear? Basically due to this, which of the following basically will not be correct? Clear? Basically will not be correct. So asset will decrease. So basically there is a decrease of the asset basically with the repayment of the loan installments. Clear? Like you have purchased a machinery. Like you have purchased a machinery of rupees 15 lakh. So basically with the machinery, basically you are producing the products and you are selling that products basically in the market. So you are earning. Clear? Basically you are earning the things. Clear? Basically you are earning money from that. Clear? You are earning basically money from that. So now it leads to decrease in the asset. No, basically machinery is to be same. Clear? Just basically we are returning the money. Clear? So asset will decrease. No, liability will decrease. So asset will decrease. Not an asset basically, which not will not, wait a minute, basically which, clear? But there is a depreciation. Clear? Basically, but there is a depreciation every year. Clear? Basically, but there is appreciation every year. So basically we can consider that little will value basically will goes to decrease. Clear? So asset will decrease up to some extent. Basically we can say that basically this is true, but we have to move to the other options also. Clear? Because we have to find out the most favorable one. Liability will decrease. This is the straightforward. Clear? Earlier basically liability is 15 lakh. Now liability basically becomes 12 lakh, clear, because 3 lakh there is a decrease in that, clear, 3 lakh there is a decrease in that, clear. So liability will decrease, so this one is also correct one, clear. So capital will decrease, so there is nothing anything regarding that, clear. Capital will decrease, there is nothing anything regarding that, clear. So option number C according to me is the not correct, clear. Basically which one is the not correct? So option number C according to me basically it will be the answer, clear. According to me basically it will be the answer, clear. So you have to go through all these points very carefully, clear. You have to go through all these points very carefully, and only after that, clear, basically, and only after that basically you are able to answer the question, clear, and only after that you are able to answer these questions. Okay, so now move to the next one, clear. Basically now move to the next one. Last question. So please go through this question. Firm Z purchases machinery basically for rupees 2 lakh. How much basically that is basically cost of the machine is rupees 2 lakh. Out of the cash available with it, clear. Basically they have already cash, clear, because they are not taking any loan, clear. Basically they are not taking any loan. Basically they have already cash in hand, clear. Basically they have already cash in hand. Cash in hand basically it is also asset. So basically they will take one cash in and out, and other basically they will take, clear. So that is basically not any increase, not any decrease basically in the asset, clear. So basically they have already asset. In the assets we have cash, we have machinery, clear. Basically in the assets basically we have cash also, basically we have machinery also, clear. So now basically they are purchasing the machine, clear. Basically now they are purchasing the machine of rupees 2 lakh, clear. They are purchasing the machine of rupees 2 lakh. So basically earlier we can say that cash is how much they have left basically in their hands, 5 lakh. Machinery is of rupees 4 lakh in their hands, clear. So now next but they will do, they will take 2 lakh, clear. So 3 lakh is to left here. So basically they are purchasing machinery of 2 lakh, clear, 6 lakh. So earlier also 6 lakh. Earlier also basically we have 9 lakh rupees cash. Presently also basically we have 9 lakh rupees cash, clear. So there is not any change in the cash available, clear. So there is not any change available in the cash, clear. So that is basically we can say there is not any change in the asset, clear. There is not any change in the asset here, clear. Clear, there is not any, sorry, there is not any change in the asset here, clear. There is not any change in the asset here, clear. So option number A, what it say that basically increase the assets? No. Increase the liability? Basically there is not also, clear. Basically why there is not any change in the liability, clear? Because they are not taking any loan, clear, not taking any amount basically from any third party, clear. So there is change any liability? Not, there is nothing anything regarding that, clear. So reduce the capital, there is nothing anything change on the capital also, clear. Reduce the capital? No, because we also know that basically capital plus liability is equal to the asset, clear, is equal to the asset, clear. As there is nothing any change in the asset, so how we can change that, say that basically there is change in the life capital, clear. Either nothing is not reduced, not increase in the capital, clear. Option number D is none of the above, clear. Option number D is none of the above, clear. So option correct answer is option number D, that is none of the above, clear. None of the above is the correct answer, clear. None of the above is the correct answer. So please tell fast, this point is clear to all of you or not? Please tell fast. Clear? Okay. So now basically in one question, basically you have a little bit doubt. So basically they have raised a loan. Clear, loan, that is basically machinery, clear. So basically with the passage of the time, clear, basically here basically what they have to think is that is basically there is a depreciation also, clear. There is a depreciation also, clear. Basically there is a depreciation, we can say that basically there is a amount decrease in the machinery, clear. Basically there is a amount decrease in the machinery, clear. We have to think over that here, because we have to find that most suitable answer, clear. Because here basically we have to find that basically most suitable answer, clear. So according to that, basically C is the most suitable, that is which will not be correct, clear. That will not be correct, clear. So up to some extent, basically this one is also right one, clear. This much is also correct one. So any other query, any other doubt regarding these 5 questions, please tell fast. Okay, so can we start our next topic, that is chapter number 14? Okay, fine, good. So now we will start. So today basically we will start our topic, that is chapter number 14, that is preparation of final accounts. Clear? Preparation of final accounts. Clear? Very, very important. This will take 2 to 3 sessions. Clear? Basically, we will cover that. Okay, very soon. Clear? Within 2 to 3 sessions. Clear? Basically, we will take 2 sessions on a day also. We will cover very soon. Clear? So please go through topic very carefully. Clear? Even at least you will cover 50 to 60%, sorry, 60 to 70% topics very properly. You are able to clear the examination. Clear? Because from these topics, they ask basically maximum questions. Clear? Module C is very, very important for the examination point of view. Clear? And very easy. Just think logically and try to answer the question. Clear? So preparation of final accounts. So in every business, clear, basically in every business, the ultimate objective, clear, basically what is the ultimate objective of recording the question, basically financial transactions, clear. The ultimate objective basically of recording the financial transaction is to prepare the balance sheet and the profit and loss account, clear. So basically what is the ultimate objective of recording the financial transaction is to prepare the balance sheet and the profit and loss account, clear. That is prepare the balance sheet and profit and loss account, so that all the account holders, clear, so that all the stakeholders get a fair picture of results of the operation of the enterprise during the accounting period, and also the financial position basically at the end of the accounting period, clear, and also the financial position, clear. Like basically we want to purchase the share of any company, clear, basically we want to purchase the share of any company, clear. So first of all basically we will do the check the balance sheet, clear. Basically first of all basically what we will do, basically we will do the or check the balance sheet of that organization, clear. Check the balance sheet of that organization, and further basically we can say that basically we will check the profit and loss account, clear. Basically how much the liability basically on that company, clear. Basically it is beneficial for us to invest in that company or not, clear. Basically it is beneficial to us basically to invest in that company or not, clear. So all these things basically we have to check, clear. All these things basically we have to check that here, clear. So final accounts are the accounts, clear. Basically final accounts basically are the accounts which are prepared basically at the end of the accounting period, clear. Basically final accounts basically are the accounts which are prepared basically at the end of the accounting period, normally a year, clear. Basically normally a year, clear. Clear. So final accounts basically are the accounts that is basically at the end of the financial year, clear. Basically they are prepared basically at the end of the financial year, clear. So financial accounts basically are the accounts which are prepared basically at the end of the accounting period, normally a year. So these accounts show the final results of the business, clear. Basically these accounts show the final results of the business carried out in terms of profit earned or loss sustained by the business, clear. So these accounts basically show the final results of the business, clear. Basically carried out in terms of profit earned or loss sustained, clear, basically by the business enterprise. So as also the final picture regarding its assets and liabilities, clear, as also the final picture regarding its assets and liabilities basically at the close of the accounting period, clear. Basically as the close of the accounting period, clear. So basically what will happen, basically if the two cases arises here, please remember, and I will tell you basically if you are able to go through this session, definitely your examination is nothing, basically you are able to understand many more points, clear. Two cases arises, clear. One that is profit, basically if the companies earn profit, and the second one is the companies are getting loss, clear. So if the company is suffering from the loss, clear, basically if the company is suffering from the loss, so that loss is to be suffered by that specific organization, clear. That loss is to be suffered by that specific organization, clear. No one will contribute in your loss, clear. No one basically will contribute in your loss, clear. Basically if you are earning the profit, clear, basically if you are earning the profit, then this profit, clear, basically then this profit you have to share, clear. Basically then for this profit basically you have to share with your shareholders also, clear. Then this profit basically you have to share basically with your shareholders also, clear. Basically then this profit basically you have to share basically with your shareholders also, clear. Shareholders also, clear. So please remember all these things, clear. Basically please remember all these things. So how the complete process is to be going on, clear? Basically how the complete process is to be going on, clear? So basically at the end of the financial year, clear? Basically on the preparation of the profit and loss account, clear? Basically profit and loss account, you are able to remember that, clear? Basically what it is going on, clear? Either there is a profit or there is a loss, clear? So please remember all these things, clear? Now next one. So preparation of the trial balance, clear? Basically preparation of the trial balance. So trial balance basically means that basically before the preparation of the final balance sheet, clear? Basically we are purchasing the trial balance sheet, clear? Basically so that basically we are able to understand, clear? Basically whether basically we are making any mistake at any place or not, clear? Basically all these things basically we have to understand that here. So at the end of the accounting year, clear? All ledger accounts basically are balanced. And then a trial balance is prepared, clear? From the trial balance, final account, that is trading, profit and loss account, and balance sheet are drawn. So in a manual system, clear? Now all are to be computerized. Earlier, clear? So basically there are very less chances of the mistake, clear? In the computerized system, clear? So basically from a manual system of bookkeeping, a trial balance basically was commonly prepared to find out basically whether any posting or mathematical errors were made. Nowadays, basically, bookkeeping and accounting software has eliminated these clerical errors. Clear? Nowadays, basically, bookkeeping and accounting software clear basically has eliminated basically these clerical errors. Clear? So this means that the trial balance is less important, basically for bookkeeping purposes. Clear? Basically, since it almost certain that the total of the debit and credit columns will match. Clear? Basically, since it is almost certain that the total of the debit and credit columns basically will match. Still, the trial balance basically continues to be important. Still, the trial balance continues to be important basically for most accountants as also the auditors. Clear? Basically, who wish to continue the GL account. Clear? So, can anyone tell basically what is the full form of GL? Clear? Basically, who knows wish to know the GL account balances before and after the proposed adjustments. Clear? Basically, I will tell you basically what is the meaning of the proposed adjustments. Clear? As also the proposed adjustments. Clear? Basically, they have to know the balance basically after the proposed adjustments, and also basically they want to know basically what are the proposed adjustments are there. Clear? So the final account balances basically after the proposed adjustments are known to be as the adjusted account balances. Clear? That is after the proposed adjustments. Clear? So GL basically stands for the journal ledger. Clear? Journal ledger. Clear? So the final accounts balances basically after the proposed adjustments are known as the adjusted account balances and are used basically in the preparing the financial statements of the business enterprise. Clear? So the trial balance basically whether adjusted or unadjusted, clear, by itself is not a financial statement. Clear? Basically the trial balance basically whether adjusted or unadjusted, clear, by itself basically it is not a financial statement. Clear? It is not a financial statement. Clear? So I will tell you here what some of the important points, like basically what are the proposed adjustment. Like in some organization basically salary of the month is to be paid in the same month. Clear? Like we can say that in some organization basically it is 25th or it is basically 27th or on 29th or on 21st of that month or on the last day of the month. Clear? Or on the last day of the month. Clear? So basically you will get their salary. Clear? Basically you will get their salary. Clear? Like basically in some organization basically what will happen that on the next month. Clear? Like on the 5th of the next month or 7th or on the 1st of the next month. Clear? Basically you will get their salary. Clear? Like of the March month. Basically you are getting salary on 2nd of April. Clear? Basically you are getting salary of 2nd of April. Clear? So the salary here, that is basically you have to pay of the March month. Clear? You have to pay of the March month, but that will be adjusted basically in the next month. Clear? Basically, but we are not paying that salary. Clear? But basically we are not paying that salary. Clear? Basically in the same month. Clear? Or we can say that basically not in the same financial year. Clear? Basically not even in the same financial year. Clear? But basically in the next financial year. Clear? Basically, but clear? Basically what will happen here? that is we are just paying in the next month. Clear? That is basically we are just paying in the next month. Okay, so this is the adjusted entry. Clear? Basically, this is the adjusted entry. Basically, we have to adjust basically in the previous financial year. Clear? Basically, in the financial year, basically for which basically it is giving basically we are salary. Clear? Basically for the salary, basically for which period basically we are giving the salary. Clear? So basically we have to take care regarding that. Okay, that is basically known to be as the adjusted entry. Clear? Basically that is known to be as the adjusted entry. Clear? So now basically we have to discuss all these things regarding that basically in the upcoming session. Clear? So adjusted entries. Clear? Adjusted entries. So recording of all the financial transactions. Clear? Basically recording of all the financial transactions taking place basically during the accounted period results in basically debit or credit balance basically in the accounts. Clear? Basically results in clear. So basically recording of all the financial transactions basically taking place basically during the accounting period. Clear? Results in either basically in the debit or in the credit balance. Clear? In the accounts contained in the journal ledger. For example, the rent paid basically for the office results in a debit balance in the rent paid account. Clear? Rent paid account. Clear? That is debit balance. Clear? Because we have paid. But if the rent for the last month of the accounting period, that is say March 2019, is paid during the next month, that is April 2019. Clear? So the rent paid account basically will not be reflected the rent paid basically for the full year on March 31. Clear? Basically for the full year. Clear? Why basically it will not reflect? Because we have not paid the rent of the March month. Clear? Because we have to pay the rent of the March month basically in the next year. Clear? So if the profit and loss account basically for the period ended March 31, 2019 is prepared basically on the basis of the balance as taken in the rent paid account, it will not give a fair picture. Clear? As full rent basically for the year is not taken into account. Clear? Basically as full rent basically for the year basically is not taken into account. Clear? So this will result in showing an inflated profit in the profit and loss account. Clear? Because we have not paid the rent of the March month. Clear? Basically in the month of the March. Clear? In the month of the March. Clear? So basically this result in the inflated profit basically in the profit and loss account. Clear? So to address this problem, basically a debit entry basically for the amount of rent basically for March 2019, basically say 5,000 basically will be posted in the rent paid account. Clear? So basically we have to post a specific entry. Clear? Basically in the rent paid account. Clear? So the corresponding entry basically goes to which account? Clear? Basically the corresponding entry. Clear? Basically will go to which account? That is basically we can say that basically we have to adjust that entry in the next financial year. Clear? So as at the close of accounts basically on 31st March 2019, when we look at the assets and liabilities, clear, basically we have an obligation to pay the office rent basically for 1 month. That is rupees 5,000 to the lessor. Clear? Basically who have given our building on rent to us. Clear? Who have given our building basically on rent to us. Clear? So that is basically, so basically here in the month March, so basically we have posted an entry that is in the rent paid account. Clear? That is basically this much amount basically we have to pay. Clear? This much amount basically we have to pay. Clear? So will be reflected in our balance sheet basically by way of credit balance in some account. Clear? Basically by way of credit balance basically in some account. Clear? So this account basically in which the credit entry basically of rupees 5,000 basically we may put, that is basically we can say that a rent payable account. Clear? So there are two accounts, that is rent paid and rent payable. Clear? So basically this account basically we have to debit and this we have to credit, that is rent payable account. Clear? That is basically next month basically we have to take amount from that. Clear? Rent payable account or some such other account basically may be given to it. Clear? So it is important to note that this set of debit and credit entries, clear, basically this set of debit and credit entries posted in the two accounts at the end of the accounting period. Clear? Basically this set of credit and debit entries posted in the two accounts basically at the end of the accounting period is not the result of any financial transaction. Clear? Basically it is not the result of any financial transaction but an adjustment. Clear? So basically we can say that basically this is not any financial transaction. Clear? But it's simply basically an adjustment. Clear? To prepare the correct and fair financial statements. Clear? Basically to prepare the correct and fair financial statements. Clear? So therefore such entries basically are called as the adjustment entries. Clear? So therefore, basically such entries basically are called as the adjustment entries. Clear? So please tell fast up to this much point. It is clear to all of you or not? Please tell fast up to this much point. Basically, it is clear to all of you or not? Like what are adjusted entries? Clear? Like what are adjusted entries? Now I will take one more example, which are basically already mentioned in the book. So adjustmented entries. Clear? So I will take here just. So some of the expenses basically may have been incurred, but not paid. Clear? First point basically, which we have to discuss here, that is some of the expenses. Clear? Basically, some of the expenses basically that may have already incurred. Clear? That may have already incurred. Basically, what we have not paid. Clear? Example. Like salary for the month of March. Like salary basically for the month of March is due. Like salary basically for the month of March is due basically, but paid in April. Clear? Basically, but paid in April. Clear? So hope it you are able to relate that point basically with one. That is some of the expenses basically may have been incurred. Clear? That is basically we have already taken the work basically from those persons. Clear? But salary basically will not be paid. Clear? That is salary for the month of March has been incurred basically during the month, but will be paid in the April. Clear? Basically, what will be paid in the April. Clear? So basically, what we have to do. Example, basically in that case, basically what we have to do, basically salary account. Basically, we have to take the salary account, basically we have to debit. Clear? Salary account, basically we have to debit in that case. And which account basically we have to credit, that is to salary payable account. Clear? Basically we have to credit. Clear? To salary payable account, basically we have to credit. Clear? Basically to salary payable account, basically we have to credit that. Clear? Basically to salary payable account, basically we have to credit that. Clear? Okay. So this is the example, that is some of the expenses basically may have been incurred but not paid. Clear? Basically some of the expenses basically may have been incurred basically but not paid. Clear? Basically but not paid. Clear? This one is the example of salary. Clear? Second point, some of the expenses basically may have been paid in advance basically but not incurred. Clear? Some of the expenses, that is basically we have already paid in advance basically but not that incurred. Clear? Basically but not that incurred. Clear? So all of you are working in the banking sector. Clear? So basically there is a thing of the regarding festival advance. Festival advance or salary advance. Clear? So please tell fast. All of you are aware regarding that? Festival advance or salary advance. Please tell fast. I think all of you are aware regarding that. Basically, what is salary advance or festival advance? Clear? That is some of the expenses basically may have been paid in advance basically but not incurred. Clear? So in that basically that is 1 month's salary. Clear? Basically will be provided to you. Clear? In the advance. Clear? Basically as per your requirement basically you will take, and there is basically annually installment, that is basically monthly installment. Basically it is to be deducted basically in your salary. Clear? Every month monthly installment basically it is to be deducted basically in your salary. Like we can say that basically there are 10 installments or 12 installments. Clear? There are 10 installments or 12 installments. Clear? Like in this way. Clear? But just we are taking the example of the 10 installment basically for easy. Like you are taking 40,000 at advance. So every month basically you have to pay 4,000. Clear? Every month basically you have to pay 4,000. Clear? Every month basically you have to pay 4,000 in that way. Clear? So basically that is the case here. Clear? Basically that is the case here. Clear? Hope it is clear to all of you. Clear? Second one, that is if a payment basically has been made in advance, that is it does not pertain to the accounting period in question, it is not treated as an expense. Clear? And the person basically who have received the amount basically it is treated as a debtor. Clear? It is treated as a debtor. Clear? Because they have to give back the money. Clear? Basically they have to return back the money. Clear? Third one, some incomes have been maybe have been incurred basically but not received. Clear? Some incomes basically may have been accrued but not received. Clear? Basically but not received. Clear? That is we can say that basically, for example, interest accrued. on a fixed deposit basically with the bank, clear, that is continuously basically interest is to be going on, clear, basically, but when the bank will give the interest, that is basically on the maturity, clear, along with the principal. Example, interest accrued on a fixed deposit basically with the bank, which will be paid by the bank basically on maturity along with the principal, clear, or on maturity basically along with the principal, clear. So for accounting this interest income, clear, basically credit interest income account, basically we have to do basically interest income account, because which we have to return later, clear. Interest income account basically we have to credit, and debit, that is interest receivable account, clear. Interest receivable account basically we have to debit in that basically. So some income basically may have been received basically but not incurred, clear. Some income basically may have been received basically but not incurred, clear. That is basically we are doing payment advance, clear. Advance, like basically we can say that basically we are paying the installment in the advance, clear. That is basically income have been received, clear, basically, but not, we can say that installment basically you have to pay at the end of the month, but you have to pay in the starting of the month, clear. So if an income basically has been received basically but not incurred, so it should not be accounted. For example, advance rent, payment of rent basically by a tenant, so this should not be taken into account, clear. So therefore rent received account basically should be debited, and the advance rent received account basically should be credited, clear. So in that case basically advance rent basically we have received, so basically we have to credit that account, that is advance rent received, and basically which account basically we have to debit, that is the rent received account basically we have to debit, clear. Rent received account basically we have to debit, clear. So this is the brief introduction of the adjustment entries, clear. This is the brief introduction of the adjustment entries, and definitely you will get basically one or two questions basically from this specific slide, clear. From this specific slide, clear. Just you have to remember the definitions, clear. Examples, clear, not a definition basically the examples, clear. Just you have to remember the examples, clear, basically which I have taken here, clear, basically which I have taken here, clear. Only basically with the exam help of that, clear, you are able to answer, clear, basically you are able to answer. Like in the second case, clear, in this case some of the expenses basically may have incurred, like basically I have discussed in the chapter number 7, that is basically in some organization, clear, basically they have taken pay the insurance premium of their CEOs, clear, insurance premium of their CEOs, clear. So that is also clear, basically insurance policy is to basically due in the month of April, but they have already paid the insurance premium basically we can say that in the month of the March, clear, in the month of the March, clear. So that is basically some of the expenses they have also paid in the advance, but that not incurred, clear, basically, but not that not incurred, clear. So that is also basically we are taking the example of the insurance premium, clear. We are taking the example of the insurance premium, clear. So please remember all these things, clear. So please remember all these things basically while answering the question, clear. While answering the question basically please remember all these things, clear. So in this session basically we have to discuss up to this much point. In the next session basically we will start further, clear, basically we will start from this point and along with some questions, clear, along with some questions, clear. So thanks to all of you for attending this session.